Well, hello and welcome to the second trading week of December. The first week, that was a nice smash there by the Bulls. We'll see if they can replicate that this week. But here are the stories you should be watching at this time, starting with the global oil market. Now we're seeing, oil prices, starting off this week strong, just like last week, 0.19%. That's for Brent crude, $63.87 a barrel, up 0.19% this morning. Now also see WTI, that's finally jumped above that $59 level, leaving that level and getting to the $60 level by 21 cents, up 0.22%. And definitely we're still seeing geopolitics there driving sentiment in the market. We see investors are monitoring what's playing out there between Russia and Venezuelan supply, that's of oil, and we're seeing investors trying to figure out if there's going to be some limitation when it comes to supply to the market there. So that's what we're seeing. Oil prices starting off this second trading week up. We'll see if that continues throughout the week. Let's get a check now the markets now. That's for last week. The performance last week, 2.45% up. That's what we have for the all share index of the NGX, 147,000 points. Equity cap, 93.72 trillion, about 2.67% up. Definitely, looking at the market, before now, we thought a kind of bear market was, signaling in. After that, November we had, it wasn't a November to remember, at this point. The market was down a big, about 7.8%. But we're kicking off, December with some optimism that we'll see if that, continues at this time. Let's get a check now on other stories. We see Nigeria's banking systems received a significant liquidity boost in November with a total cash inflow that reached about 5.11 trillion naira. This surge was driven by large treasury bill redemptions, open market operation maturities, and increased government spending, which collectively is funding pressures across the financial system. The wave of liquidity allowed banks to maintain surplus positions, reducing the need for overnight borrowing. As a result, short-term borrowing costs, that fell sharply, with the overnight interbank rate dropping by over 800 basis points to 22.86%. Analysts say the strong liquidity backdrop also spurred demand for fixed income instruments, signaling improved stability in the banking sector. And there you have it, total inflows about 5.11 trillion, treasury bill maturities 1.35 trillion naira, open market operations 1.76 trillion, and we see FAC government disbursements, that's at 2 trillion there. All right, to other matters now. We see the federal government, they've inaugurated the National Tax Policy Implementation Committee, signaling a more deliberate and market-aligned approach to rolling out Nigeria's new capital gains tax provisions, chaired by tax expert Joseph Tebe. The committee is tasked with ensuring clarity, transparency, and minimal disruption to investors and businesses. The move comes after extensive consultations with Securities and Exchange Commission and the Nigerian Exchange Group, reflecting a commitment to balance fiscal objectives with market stability, liquidity, and long-term capital formation. Officials say stakeholders' engagement and careful execution will be central to maintaining investor confidence and supporting the growth of Nigeria's capital market. We'll drill down more on how this impacts investor confidence and if investors are really optimistic about this news. All right, we'll see as part of its efforts to tackle unemployment, the Nigerians in Diaspora Commission, NIDCOM, they partnered with InnoPower Africa to connect young Nigerian professionals with remote job opportunities in diaspora-owned businesses across the United States, Canada, and the United Kingdom. The partnership was formalized during a memorandum of understanding signing on the sidelines of the 8th Nigeria Diaspora Investment Summit in Abuja. NIDCOM Chairman Abike Dabri-Erewa said the initiative taps into the expertise of Nigerians abroad who can act as employers, mentors, and champions to create opportunities at home. InnoPower Africa's founder, Emil Kiyo, added that the agreement will provide practical job engagements and open up unlimited opportunities for Nigerian youths, helping to turn around the nation's unemployment challenge. Yeah, we have a lot of remote workers, in Nigeria, and they're earning, foreign currency. Let's get more in at this point. Let's look at the pension industry now. PTAD, They've reassured DBS pensioners that their welfare remains a priority, particularly regarding arrears from recent pension increases approved by President Bola Ahmed Tinubu since September 2025. The Directorate has added the 32,000 naira increment to monthly pensions and consistently paid arrears. The remaining balance, now reduced to just about a few months, will be settled as soon as additional government funds are released. The Executive Secretary, Tolulope Odunaya, confirmed this. So, yeah, I guess good news for pensioners there. All right, Nigeria is entering a new era of clean energy industrialization as local solar panel production has surged, while imports of finished panels that declined. In October 2025, the country imported 110 megawatts of solar cells, surpassing the 82 megawatts of fully assembled panels. The Rural Electrification Agency confirmed this. REA Managing Director Abba Aliyu described this shift as historic, noting that assembling panels locally keeps 60 to 7% of the value within Nigeria, supporting jobs, skilled labor, and industrial growth. He said the development signals a move from simply buying clean energy solutions to building them right here at home. So another matter now, as Nigeria's economy records a renewed pickup in business activities, investment, and strategic management, experts are calling on Nigerians to adopt integrity and diligence as core values for sustained economic growth in the country. The chairman of Odua Investment Company Limited, Sir Bimbo Ashiru, made this call at our Saviour's Church Business Fellowship in Lagos, where he was a guest speaker. According to Mr. Ashiru, the future of Nigeria rests in the hands of its citizens. Take a listen.
As 2025 draws to a close, the Business Fellowship of Our Saviour's Church deems it fit to retrospect on the outgoing year with respect to operations in the marketplace and prepare for 2026. The theme they've chosen for this is integrity and diligence, recipe for good success and sustenance.
For good success and sustenance.
They explore this through the experience of the chairman of Odua Group, Otumba Bimbo Ashiru, who has gone through the banking sector and even served as a commissioner in the public sector.
When integrity and diligence are combined, they create a powerful formula for success. There is nothing more dependable and comforting than having reliable people around you. I imagine that is why it is said in the Bible that you see a man that is diligent in his business, he shall stand before kings. He shall not stand before mean men. Integrity ensures that your actions are guided by a strong moral compass, while diligence drives you to excel and make the most of opportunities. And let me start with my own
For Otumba Ashiru, religious bodies have roles in achieving good success.
Government is blaming churches, they are blaming mosques, they are blaming this. So what do we preach? Like somebody said, Nigeria has the highest number of churches in the world. But I don't know. So now, the future of this country is in our hands. And the only way we can do that is that the issue of integrity, diligence, and essential ingredients for achieving good success and sustainable business in life. I encourage you all to embrace these values, not just as means to an end, but also as a way of life.
Our Saviour's Church believes that Christians should occupy and lead at the marketplace, and tips like those shared here will lead to sustained leadership in their businesses.
Now to our first conversation. Following widespread concerns over the new capital gains tax, federal government have inaugurated the National Tax Policy Implementation Committee to consult widely and address areas of public concern. As I said before, the committee, chaired by Joseph Tegbe, has assured investors that the rollout of the policy will be fair, transparent, and balanced, even as the government on gains from the sale of Nigerian shares. Well, joining us for this conversation now, we have Mr. Mukhtar Mohammed, CEO of Finance with Mukhtar. We'll also be breaking up what's playing out with most of the asset classes globally and right here in Nigeria. Great to have you, sir. Good morning.
Good morning, Ladi.
So finally, I know you've been talking a lot about CGT, this time, and now we're seeing the government, setting up a committee to, consult widely. Do you think, this promise of a wider consultation and a human face in implementation will be enough to maintain Nigeria's competitiveness, attracting, foreign portfolio investments at this point?
Ladi, like I said, the last time we were there together, I complained about the capital gain tax and in terms of implementation, what the government is really trying to do, and whether stakeholders were carried along. And finally, you're beginning to realize that, the stakeholders were not carried along. Sometimes we do things that you just come with a policy that has been signed into the law. Now you're not consulting people to know what is the area that we need to deal with. I think government had not brought clarity in the area of this tax reform, and which is investors globally always look at your tax policy before investing in your market. And you know what happened when this clarity was not there, how the market suffered the largest loss in a single month in the history of the Nigerian stock market. And since then, the market has not recovered. We are seeing gradual recovery. And remember the kind of recovery we saw a day after when the minister said, we've heard you, and you will hear from us soon. So we are beginning to hear from the minister. I like what the Tax Implementation Committee chairman is saying. I like the way they are trying to go about their activities. But again, Ladi, time. This bill is supposed to, implementation is supposed to start on the 1st of January. So I'm wondering how they will be able to pull it off, reduce it, coming with a new process. Will they suspend it for now? There's still no clarity. And like I always say, market need clarity to go forward. If you watch what the chairman of the implementation committee was saying, he was saying that we'll consult and we'll see how implementation can still start in January, but maybe we'll talk down on some of it. Maybe we'll step down some of them. There's still no clarity on what we have to do. I like what the Nigerian Exchange Group is doing, now beginning to come out to ask for a suspension for the next 5 years. And other capital market operators are saying, let's have a breather, let's prepare for this. How do we go about it? Ladi, the Nigerian market needs a lot of foreign investors, especially to stabilize the Naira. And we cannot drive foreign investors. You have to bring attractive investment product for them. For me, if you ask me where I am, I think the capital gain tax should be thought through carefully. Implementation should be suspended for now. Take through the stakeholder. The economy is still fragile, even if we are excited about what has happened thus far. But there's still other issues, and one of the major issues is to create stability in the FX market, so that we don't suffer what we suffered when it went to as low as 1,300, and you saw it now went back to about 1,700 before it's returning to where it is now.
So, Mr. Mokhtar, definitely, I believe this, CGT tax, it definitely has, a good side, to it. I guess it encourages, long-term investment, because if you sell out of a stock and, you get to that threshold, if you invest in another stock, I guess you will not be taxed. So is that encouragement of, long-term holding, and many other good sides to it, because definitely increases government revenue. I guess it also helps to enhance market transparency in a way. Does the good not outweigh the bad?
Ladi, yes, I agree. You reinvest your capital. You don't pay capital gain tax. You also, if you're a retail investor, you don't go outside 150 million. You don't pay capital gain tax. Yes, you have liquidity. Yes, those are good policies. You can see it from there. Now, Ladi, this is what happened. If I'm going to hold this stock for the next 1 year, I'm not selling. I refuse to sell any of my stock in 2026, where the capital gain tax comes into implementation. In 2027, will you be taxing me when I decide to sell? Will you be taxing me that I made so much profit in 2026 that I didn't sell? Will you start taxing me from the profit I made in 2026? Or you have to wait for me to make on that profit from January 2027 before you say tax? Those are the type of clarity the market needs. Every market in the world, there's a level whereby if you have hold a particular equity in the market, you have deepened the market, you have gone through the downs and the up of the market, you have a type of leverage, a type of, will I say, a type of holiday because you have stayed in the market for a long time. Incentives. We should create incentive. If I hold a particular stock for 5 years, at the time I'm selling, will I be paying capital gain tax? And how will this capital gain tax be calculated? Those are the type of policy we need. To deepen the market, you must create incentives. The incentives now is not enough because I'm holding a stock for the next 3 years, for the next 4 years. And at the time I'm going to sell, you are still, how are you going to calculate that tax? Do you tell me if I hold that stock for the next 2 years, 3 years, I do trading and I do not take the money out of the market, do I enjoy a tax holiday? Do I enjoy a tax freedom? Because I've held that stock for a long time. Those are part of the kind of policy you bring in that attract investors into your economy, into your market. Because every investor, any place in the world, are looking for tax holiday. You need to, because no business survive when the payment of tax is higher. So you need to look for incentives. And like I say, the era whereby tax is just an avenue for revenue is gone. These days, tax has become a means of growing your economy, creating more jobs. And those people that have jobs are not exempted from the taxes. So I think that's what the government should be looking at.
All right, so it's no longer about, raising revenue, as you said, at this point. But I'd like you to help me paint a picture here. What would you say is the, average mindset, of a foreign investor, that's coming to Nigeria's equities market? Do you think they're more, long-term focused or more short-term?
They are more short-term, Ladi, because of the volatility that you see in the Nigerian market. In any emerging market, there's volatility. Once there's any external shock, it tends to affect the market. Oil price go down, it affects the market. Gold price go down, it affects the market. War in Ukraine, it will affect the market. So when you look at investing in emerging economy, the currency issue is a major issue that investors are dealing with. Then creating a two-way exchange system. Once this crisis comes in, the two-way exchange system becomes a problem. So what investors are looking for are safe havens that will create the two-way exchange system. And they are mostly short-term players because of what I've just mentioned to you. If we begin to have policies, if we begin to drive policies that are sustainable, and they are for the long time, then you will see that most of these foreign investors will want to stay in your market for a long time. Ladi, what normally happens is the foreign investor comes into your market as a short-term investor, looking at your microeconomy, looking at how your economy is going, look at all variables of your economies. They are the ones that in turn become foreign direct investors who are here to stay for the long term. The foreign investors, those ones are here to stay for the short term, those that play the market. But the foreign direct investors, which are the key drivers of stability in your market, first of all come in as a portfolio investor before they begin to look at themselves as a long-term investor. So you must create that microeconomy. You must come up with policy that they think that is sustainable and it will help in them driving profit. Every investor is thinking of profit. That's why they are coming to your market. Ordinarily, they will be in their own market.
Right. So I guess you can convert, hot money into cold money. When those investors come with FPI, somehow they like it and they say, you know what, let's make it, FDI. But given the potential tripling of, CGT for foreign investors, how should fund managers, individual investors, adjust their strategies, to mitigate the risk while staying engaged, in the Nigerian equities market?
Ladi, that would be tough. If you look at the numbers today of foreign investors in the market, they are sitting in the first. That's why you remember when I heard the Presidential Committee Chairman saying that foreign investors are excited about the capital gain tax of 30%. I was wondering, where did you get that from? They will definitely be sitting on the fence, and fund managers also sitting on the fence. You can see that effect on the market. The market has not really recovered. We are just seeing gradual recovery, and hopefully, with those statements that were made by the Presidential Committee, we might see a little bit of recovery, because the market is suffering from clarity. So it's not the best of time for a fund manager and the foreign investors. Their strategy, as it stays now, is the strategy of what the late Bola Ige used to say during the military regime: sit down, look. So I think that's what is happening in the market now. Everybody is doing sit down, look, especially institutional investors, foreign portfolio investors. But again, for the pension fund administrator, for the institutional investors, are there local institutional investors we are talking to that will not be paying capital gain tax? And then pension fund administrator won't be paying capital gain tax, but you ask how many of them are really in the equity market. Retail investors, like we've said, will not be paying capital gain tax if you do returns up to 150 million. But how many retail investors actually will do investment into 150 million? You know how the retail investor mindset is. He invests for the very, very short term, and even when he's trying to do the long term, when issue comes out that must be dealt with, they tend to go back to the market to make withdrawals. So those that can deepen the market are the foreign portfolio investors. Those that can help sustain the kind of growth that we see in the market are the foreign portfolio investors and the local institutional investors. Now, Ladi, as it stands today, the Nigerian equity market, which used to contribute less than 20% to the GDP, is contributing about 50% to the GDP. So the government need to pay attention to it. And going forward, between 2026 to 2030, they are meant to contribute about 75% to the GDP of the Nigerian economy. So it's not a sector that the government should just fold their hands and watch policies that will kill that sector. They need to come in. They need to stabilize that sector. They need to come in with human face type of policies so that we can use the stock market to become the barometer of the Nigerian economy. Ladi, just imagine if the stock market has about 75% of the GDP of Nigeria at this moment. You imagine how foreign investors will be trooping into our market with the kind of return that we have seen. And that will have a snowball effect in every area of our economy, especially in stabilizing our currency.
All right, so I guess you've unlocked another strategy now. You know, we have the sell in May and go away. Now we have the sit-down look strategy, you know, as you said there. But let's look at the NGX now. November, wasn't a month to remember, was down about 7 to 8%. But we're starting off December quite strong. That's 2.5% already, a month to date. You know, at this point. So December is looking strong. You know, what do you think is driving this sentiment? Is it just a recovery, you know, from November? And it seems this also played out with global indexes, you know, too. December is looking strong this week.
Ladi, you know, I said it on your program, I mean, with Ini, the time the market had the issue. I said 3 things were responsible for the kind of losses we saw in the month of November. November naturally is a bearish month in the equity market. If you are a student of the equity market, October, November is always a bearish month. If you go through the past 10 years, you look at the data, that is what happened. That was affected. Secondly, the capital gain tax, like we said, there was no clarity. And then investors were trying to pull out of the market. Then remember what I talked about, the President Trump's designating Nigeria as a country of particular concern, and that was not the issue, but the response from the Nigerian government was not diplomatic enough. Imagine if they have done what they are doing now, engaging the U.S. at that time, rather than being confrontational. I'm talking about our sovereignty and why we don't want the U.S. to intervene and that. But now I think they are doing the right thing. Now, Ladi, like I said then I told Ini, and I said, by December, you see the market recover. Recovery as it stands now is not unusual in the month of December. Portfolio investors reshuffle their portfolio and also begin to look at the third quarter, knowing fully well between January to March, the earnings season starts. And you know what the earnings season means to an average Nigerian investor or institutional investors. For average Nigerian investor, is cash, good dividend payout. For institutional investors, it's good dividend yield, buy and buy capital appreciation. So normally December is like this, but it's starting early. I think Santa has come to the market early. Normally Santa comes to the market the middle of December. So Santa is in the market early. And like I said, hopefully with those clarity that are coming in the capital gain tax, it's obvious from the body language of the government that we might be seeing them coming down on that tax, either suspending it for now, engaging the stakeholder, or reducing the numbers in terms of target tax. So you see the market will continue to respond positively. But normally, Santa normally comes to the market in December, and that's what we are seeing.
Year to date, we're up about 42%. So month to date is 2.5%. Also, week to date at this point. So yeah, I guess that Santa rally might actually be coming. Definitely, I'll be looking out for that. So we see if that dirty December gets, more dirty. But let's look at gold now. That's a safe haven at this point. And, Mr. Mukta, I wonder if, gold has gotten your attention, at all this year. We're seeing it's up about 60% year to date. That's talking about gold. Started the year about 2,600 per ounce. Current level, 4,200. And definitely, we know investors love to run to gold when they feel like something bad, is about to happen. So what's bad that's coming at this point, seeing where gold is?
Larry, I'm sitting here trying to look what bad is coming for gold. I can't see any bad coming for gold now, rather than if we have crisis in some of these producing areas, especially in Africa. If we are, because it seems to be a new twist in Africa now, we begin to hear cool. Maybe that might only be where we will see those challenges. But where I'm sitting now, I don't think so. Don't forget that the Russia-Ukraine crisis, there seems to be light at the end of the tunnel. 2026 is predicted to be a very stable year for microeconomy, and also once you stability in the microeconomy, the gold market is always a gold mine, like it is called. So I think and like you say, it's a safe havens, and a lot of investors are moving towards that commodity in keeping up with that. So for me, I think as I'm sitting here, I don't see any major challenge that will affect the gold market, rather than I will see an uptick in the gold market, especially when investors are beginning to look for safe havens. Because if you look at the global economy, especially in terms of the stock market, you realize that there are talk of a bust in the AI space. And so you might see investors looking for safe havens to make sure that they preserve their gains, and also improve their gains, and they will be looking towards the gold market as a safe haven.
Right, and I've had a couple of investors, they've asked me, where do you see the top, for gold at this point? And, we've heard from, most of those global investors, they say maybe about $5,000, still has room to maybe $8,000. In your mind, do you still see more legs for gold, going into 2026?
Definitely, Ladi. I think I'll see it. Definitely, I think so, because again, like I'm saying, 2026 is not going to be so much of a volatility, and a lot of profit that have been made in 2026 will be looking for safe havens, and gold is always the first safe haven for every investor.
All right, we'll keep tracking that. Thank you so much. Mr. Mukta Mohammed is the CEO of Finance with Mukta. Thank you for starting off this week for us. Thank you.
My pleasure, Ladi. Thank you for having me.
All right, we'll take a break now. When we come back, we'll talk about AI. Yeah, is that bubble really going to burst soon? We'll find out. That's in a moment. Just stay with us. Welcome back. Well, the newly inaugurated chairman of the Association of Securities Dealing Houses of Nigeria, Mr. Sende Adenagbe, is asking for a standard reset in the Nigerian capital market, insisting that professional discipline, ethics, and stronger governance must define the next phase of the industry. He says the market cannot grow on weak structures or compromise values, and asks operators to recommit to transparency, integrity, and ethical conduct, describing these as the pillars on which investor confidence is built. Take a listen.
This is the age of technology. It's a digital age. And if you look at the population of people that are really very vast in this technology, they are the young people, the young age. So my administration, we will try as much as possible to make sure that we drive technology. We try to make sure that our members, they will have to invest in technology. That is, our operation will not be manual any longer. It must be digital. No more analog. That's another way. We also make sure that whatever we do in our market, we engage, constructively with the authorities, so that our association our trade group is recognized. There must be visibility. People must know that this association has come of age. Let me tell you that the government is trying to say that the vision is to get $1 trillion economy. If that is the case, what should we do? We are the promoter of such. We are going to create nothing less than 500 million out of that $1 trillion economy, because companies must come to raise capital from the market. Foreign investors must come to the market, and by doing that, we are helping the market to grow.
All right, now to our next conversation. We see, Nigeria is facing, elevated inflation, high youth employment and growing security challenges, while its population continues to expand rapidly. The country is under pressure to modernize and compete in a global economy increasingly driven by technology. Well, artificial intelligence is emerging worldwide as a key driver of economic growth, education, and security solutions. Now we examine how AI could help Nigeria tackle its biggest challenges, create opportunities and ensure it keeps pace with global innovation. Joining me for this conversation, Wafin Folu Awotoye is an AI researcher and data management specialist, joining me right here in the studio. It's great to have you on the show, sir.
Thank you.
Have you. Good morning.
Thank you. Good morning, Larry.
Fantastic. Yeah, so, we're talking AI at this point, and, how Nigeria can also, build its AI capabilities at this point. But while we're talking about this, we're also seeing in the U.S. and, other developed economies, they're talking about an AI bubble, at this point. And I'm wondering, okay, if an AI bubble is coming, should we really put much attention there as a country, at this point?
Yeah.
But what are you seeing about that whole, narrative of an AI bubble? They're saying the valuations are too high, for these companies. We don't have any thing to show us what profitability will be like, for these companies. How are you seeing that?
Yeah, so, Larry, very good question. One way to look at it is that AI as technology has come to stay without a bubble. Now, the investors can choose to create a hype and can choose to value AI higher than it actually is. And that is where the bubble comes. So the bubble is more for the investors than for the technology itself. And of course, companies are becoming more concerned because AI projects are failing. And we have this MIT report recently that talks about over 90% of AI projects failing. So that should give any reasonable investor some concerns. But then the approach to the implementation of AI is the real cause of the failure. And people are still seeing AI as your old products, regular product technologies, but AI comes in a different way. So that's why we have something different.
Right, because, definitely investors, traders, they love to check all these companies, that deal with AI. They like to find out what they're spending, on AI. And I got that information recently. There was a time we had that metaverse hype.
Yes.
And now we heard that Meta, they've cut down on spending, on Meta. And I'm wondering, is that going to play out, for artificial intelligence? Are these big companies really going to, cut spending on AI?
Well, it's still too early to have a very correct prediction. But one thing is sure, that the concept of the metaverse is different from the concept of AI. The concept of the metaverse, Mark was trying to bring everybody into this meta world, if you let me put it that way.
Okay.
This imaginary world.
All right. Just hold your thought now. We'll continue just to the moment. For our DSTV viewers now. We're joining a live coverage, empowering student innovation across Nigeria. That's holding now, and talking about empowering students. We'll join that, but other platforms you can still follow the money right here on Business Money. So sorry for interrupting you there,
No
but
problem.
you can conclude with your thoughts.
Yeah, so basically the concept of the metaverse is completely different from the concept of AI. The metaverse was not really designed to help businesses improve, to help improve efficiencies, in the office space and all those things. So I think they are completely different concepts, and they will have different life cycles.
Right, and talking about education, at this point, I guess, when you look at what's playing out with education in Nigeria, sometimes you wonder how Nigeria can actually lead or somehow match up when it comes to artificial intelligence and other technologies at this point. Looking at our education system right now, where do we have to tweak? Where do we have to make changes?
I definitely believe we need to change. Well, we need to continuously review our curriculum to ensure that we have the latest AI trends embedded or enshrined in the curriculum. And that way, we will be able to literally keep up to pace. Then I feel we also need public-private sector partnerships, where the organizations in the private sector that are implementing top-notch AI solutions are allowing students see what's happening. So for instance, most of the education I've received outside Nigeria has given me the opportunity to see real-life implementation of what is being taught in the class. For instance, we were learning about global politics, and we had a class where the longest-serving Prime Minister of the Netherlands was brought into the classroom. So you can imagine bringing that into the AI playbook. Go to the likes of MTN, the big tech companies in Nigeria, even the Microsoft, the Googles, reach out to them and form a sort of partnership between them and our schools at different levels, university levels. I think that will help create a very healthy level of awareness for the learners, and their curiosity will drive them to learn even more online. So those are ways that I think we can do.
Those are like quick fixes.
They are quick fixes, and on the long run, we definitely need to supply students with facilities and infrastructure to practice. If you look at the US, for instance, recently Microsoft announced, and not just Microsoft, Google, Oracle, AWS, they've all announced free curriculums and AI learnings for people in the high school and in different academic levels in the States. So I think our government too can start talking to these organizations. They are present here in Nigeria, and see how we can make those things available. Because let's face it, where people are trying to get enough power to do the basics, studying becomes second priority, or studying for AI becomes second priority. But the good thing also is that most of these learnings can be done with mobile devices, and a lot of people have that right now. So it's a whole lot of complex systems that we need to look into.
And when you look at the macros, at this point, in Nigeria here, we've seen inflation that's decelerated so far in 2025, getting us about 16%. We've also seen that happen globally, but when you hear from the people, even abroad, they talk about not feeling that inflation drop when they go to the stores. And here, we had the rebasing, of our inflation data, and we've also heard, some consumers say, okay, we're not feeling it when we go to the supermarket and the market, when it comes to prices of goods. So I'm wondering, what role can AI play, when it comes to data? Most of this macroeconomic data, maybe at the collection stage, can AI give us a better picture of what's playing out with, for example, inflation?
Definitely, AI can improve things significantly, and one thing I need to also remind us is that AI works on your existing workflows. So if your workflows and business processes and the formulas for calculating inflation is bad, AI will help you compound and and make it even worse.
Garbage in?
Yeah, garbage in, garbage out. So it's about us defining the right workflows for calculating all these indices, and then putting AI on top of it to help fast track and also make the right projections. But what we teach AI is what it's going to use to deliver value to us. But to answer your question, the answer is yes. And I also believe that the government can start working with AI startups to work together to build new solutions. We've seen these play out very well in the defense industry in the US, where the military guys know the military tactics, they know what military is about, but they really didn't know about AI. Then they brought in the AI startups who sat with them, and after working together, they were able to come up with more solid military systems that were powered by AI.
Right. And when you use some of the AI platforms, some of them, they have paid version.
Yes.
And I've tried to look at the numbers for those paid versions. It's not cheap.
It's not.
When I see Ladi, you've exceeded your limits for blah blah blah, I check I'm like, oh no, I'll continue with free. At this point. So I'm sure small businesses they struggle with some of these affording some of these tools. At this point, what would you say could help a small business with affordability when it comes to AI tools?
Yeah, well, it boils down to the use, because right now there are lots of models and tools out there. Some are free, some are well-cooked, some are half-baked, these kind of things. But you will find a tool somewhere that will do what you want and that is free. That's one thing I know. For instance, if these guys tell you you've exceeded your limit, that's fine. You just move to another tool where you've not exceeded your limit and you keep recycling that way. I believe that will help. And I also believe the government can sort of try to subsidize access for the small businesses. For instance, I know some countries have created what they call special economic zones for tech companies. So they have special taxes, they have tax breaks here and there, so that these tech companies can also pass the tax breaks down to the users within the country. So suddenly you find out that, hey, that unaffordable upgrade that you just referred to now becomes affordable, because the company is enjoying a tax break, or the company is enjoying some tax benefits from the government that now trickles down to you.
Right.
So those are some quick fixes there.
Right.
But on the whole, I think there will always be a way to wiggle through.
Right. Okay. And taking you back to most of the time Africa, Nigeria, we end up being importers
Yes.
of most of these technologies, and you've talked about what the government can do, when it comes to education. Let's, get the foundation right, so that when, as you grow up, you get more ideas, to, produce more, when it comes to artificial intelligence and all that. But, when you look at it, sometimes it just looks difficult. You try to imagine, okay, what policy they should take next as a government to actually make this a reality. So I'm wondering, at this stage, is it okay if some countries don't make it when it comes to artificial intelligence?
That's a big risk. That's a big risk, not making it, because AI is already in our everyday world, whether you embrace it or not. If you have a mobile phone, AI is there. If you use the banking facilities, they use AI. So AI is already all over the place. And instead of focusing on the big problems, can we start solving the problems, one step at a time? As they say, the journey of 1,000 steps, the journey of 1,000 miles starts, with a step.
Right.
So we can have a look at these problems from a holistic perspective, ask ourselves what policies can we put in place to help us be better, and then start implementing one step at a time. We will definitely get there, but staying behind will not help us. It will end up making us a consumer of technology instead of a net exporter of technology. And right now, we are positioned to be a net exporter of technology if we make the best use of the global landscape right now.
Right. And what sectors would you, say in Nigeria do you think AI would help, to create productivity when it comes to, agriculture? Are you seeing anything there?
I definitely will see a couple of sectors where we will get some near-term benefits. And when I say near-term benefits, I mean very tangible benefits. Yes, agriculture is one, healthcare, education, these, and of course the banking system that we just mentioned. If we talk about agriculture, right now AI will let a small farmer have access to immediate access to expert technology that only big farmers could afford some years back. And AI solutions that now speak Hausa, Igbo, Yoruba can warn the farmers of heavy rains coming, and sort of alert them and say, hey, don't apply too much fertilizer so that they don't get washed off. Things like that. In the healthcare, we can even build solutions that will help foreign doctors to see patients in Nigeria for.
So you don't have to pay that, to transport yourself.
You don't have to transport
out of the
yourself.
country.
Yes. And I've lived this experience, even though, for instance, I went for the routine eye checks, and I was brought into a room and I sat down. It was just me and the devices, and some guy appeared on TV. He was literally in another state. And he attended to me, told me, okay, put your eye here, tell me what you see, and you read all the numbers and you check everything, and he tells you, okay, and he flips the lenses and he tells you to read again, and everything happened via telehealth. So I think these are areas we can explore to sort of stretch the limited resources we have right now.
Fantastic.
Yeah.
And, reduce costs.
Reduce costs, yes.
All right, thank you so much. It was great having this conversation with you.
Thank you, Larry.
Finfolo Awotwe is an AI researcher. Thank you for joining me on Business Morning today.
Thank you for having me.
Thank you.
Yes.
All right, we'll check out what's played out in global space in a moment. Do stay with us. Let's get a check on global space now. We have John McQuarrie with the details. Great to have you. Any happy new week. And I see it's all about central bankers, mostly this week, and data.
Yeah,
I believe.
It's going to be a very busy week, important one. Of course, I think the heavyweights are on Wednesday, midweek, when we're talking about from the US, the Fed, from EU, Christine Lagarde is expected to give a speech which is supposed to, get a lot of sentiment.
And don't forget our just got backs that are coming into Nigeria, and they're going to cause traffic for us. Don't forget that.
Okay, that's one of the major data that we'll focus
exactly.
on. Anyways, good morning, everyone. Welcome to the Global News segment of Business Morning. I'm Ini John Mekwa, and we start with expectations for the week. Some of them we've already mentioned, but starting from Monday, we're expecting Switzerland consumer confidence data. That's supposed to come today, Monday, and then the United States consumer inflation also. So we have the Switzerland consumer confidence and then United States consumer inflation expectation. That's expected today. For Tuesday, in Germany, the balance of trade will be shared. And then also in the United States, there'll be a 10-year note auction that will be shared. And Wednesday, is the big day. We have the Federal Reserve policy announcement. Of course, we know that's going to guide market sentiment, oil, gold, everything. So that's a big one. And also the European Union ECB President Christine Lagarde will give a speech, they say, before the blackout in the EU. So that's very important. Also on Wednesday, in Italy industrial production month-on-month data will be shared, and China inflation and trade data. So you see, if you have the United States, you have the EU, and then you have China, Wednesday is really going to be a busy day, a day to look out for. And then on Thursday, we have the Australia unemployment rate that will be shared on Thursday, as well as the United States core PPI, and that's the producers pricing index year on year. That's it. And then on Friday, Spain inflation rates, final one for the year on year. That's what to be shared on Friday. So it's going to be a very busy week. Sentiments will, of course, be guiding or moving towards the data that will be shared on these different days, especially on Wednesday. Even from today, we're going to start hearing, getting tips on how it might be. 25 basis point cut, I think that's the expectation for the United States. And we'll be hearing how that'll be moving oil and every other commodity. Now, away from the expectations for the week, a Russian liquefied natural gas export facility delivered its first shipment to China since being sanctioned by the U.S. in January, the latest sign of increased energy cooperation between Beijing and Moscow. I wonder what the United States will say about this. The Valeria vessel, which loaded a shipment from Gazprom PJS Portsval facility of the Baltic Sea in October, arrived at the Beihai Imports Terminal in southern China today, according to ship data. Both Valeria and Portsval were sanctioned by Joe Biden's administration to thwart Russia's plans to boost LNG. And also, China will keep expanding domestic demand and support the broader economy with more proactive policies in 2026. This is a top decision-making body of the ruling Communist Party in the country cited this, saying that the remarks about a more proactive fiscal policy and appropriately loose monetary policy, that is what we'll be seeing from now on in China.
All right, thank you so much, Annie. But before I let you go down, breaking news, see Nigeria's external reserves have surpassed $45 billion, and that's for the first time in 6 years, according to data from the Central Bank of Nigeria. We'll drill down on the details later on. Thank you so much for watching Business Morning. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.